Real estate syndications and their tax benefits, an in-depth review. Shortly after hearing about real estate syndications and learning how simple it is to generate the passive income you want, you might start wondering, okay, but what about the taxes? Hi, I'm Vic Raya with Viking Capital. I'm so glad you're watching right now because you're about to see how easy it is to reap the rewards of tax benefits associated with real estate syndications. Taxes aren't exciting, are they? Well, you'll think differently after you listen to this video. When you invest in real estate syndications, the first thing you need to know is that every year you'll get what's called a Schedule K-1 for your taxes. This comes typically around spring, maybe end of March. Basically, a K-1 statement reports your income and losses for that real estate syndication investment. Now, one of the biggest benefits to investing in real estate is that you can write off the expenses. In commercial real estate, which are these real estate syndications I've been sharing about, you have two main benefits that include depreciation and cost segregation. If you own your own home, you're probably familiar with depreciation, which means you can write off the value of the asset over time. In residential real estate, that's 27.5 years. If you buy a home, you can write it off little by little every year for 27.5 years. The depreciation schedule for commercial real estate is a little bit longer at 39 years. If you remember, however, we don't hold these syndications for 39 years. We only hold them for, let's say, 5-7 years. If we only took the depreciation for 5 years out of the 39 years, we'd be leaving 34 years worth of depreciation benefits on the table. That's where accelerated depreciation and cost segregation come into play. What cost segregation means is that when we buy these commercial buildings, we'll have a cost segregation specialist come out and look around the property. They'll create a report and they'll say, hey, that lighting fixture, instead of 39 years, you can write off in maybe 10 years. Those carpets, you can write those off in maybe 5 years, and so on and so forth. Suddenly, we have a schedule that allows us to write off all these different pieces off on a much shorter timeline. That increases the amount in write-offs, and we can't take upfront during those first 5 years. This is some of the strategies that the sponsors are working on in the background, and you'll see those losses reflected in your K-1s each spring. I think one of the coolest parts about investing in syndications is the cash flow returns every month or quarter. But when you get your K-1s in the spring, it won't show that you actually made money. It'll actually show that you lost money because all the depreciation and cost segregation benefits. While you're actually cashing checks and you have the money coming in on paper, it looks like you're actually losing money. Now, I know this can be confusing, but for tax purposes, it's a really good thing. That means that you're likely not having to pay any taxes on the cash flow income. Now, as the rest of the losses, because sometimes these losses can be quite substantial, you'll have to talk to your own CPA about what applies to your own tax situation and how much of these losses you can actually apply, if any, to your ordinary income. I want to make sure you hear this. It's likely your ongoing cash flow will not be tax-free, but tax deferred. You may not have to pay tax on it right now, but when the asset is sold at the end of those 5 years, there'll be a depreciation recapture and you'll have to pay tax on the gains. Again, your CPA is your best friend here. Talk to your CPA about how this will apply to your personal tax situation, because your tax situation and my tax situation are going to be different. All in all, that's what you can expect when investing in a real estate syndication. A K-1 each spring and paper losses throughout the life cycle of the project. A lot of big financial decisions take place through the process of finding a syndication investment deal. So if you have invested in a syndication, what were some of the biggest tax benefits you found from the investment? If you haven't yet invested in a syndication, what's holding you back? I can't wait to read your comments. If you're interested in learning how investing in real estate syndications can help you achieve financial freedom and live the life you've always wanted, I'm personally inviting you to join the Viking Investor Club today. You'll find the link down below in the description. In closing, give this video a thumbs up. Make sure you're subscribed here so you can get notified when I post the next one. Do you have a friend who needs to hear this? Share that with them. I'm Vic with Viking Capital. See you next time.